Well, welcome to the April edition of the Grain Navigator. I'm glad you're all here. I imagine you're out there seeding away and you've got your smartphone on. You can watch this video and learn a few things, hopefully, while you're seeding and see how much money your crop's going to be worth at the end of the year. So let's get going. First of all, if you want to download the PDF document, just click the link. It's right on the website. It's a PDF. It's got all the charts and everything like that on it. I think it's 12 or 13 pages long. So it's got a lot more information than this video. I'm going to try and keep it a little bit shorter than last time, hopefully about 15 minutes or so. So let's get going. First of all, we do have the global world ag stage. Regardless of what anyone says, we need a bumper crop. We have a supply issue. There's no getting around it, and demand is absolutely super strong right now. So that's excellent for us in grain commodities. In the financial world, they're just printing currency left, right, and center, and that is going to mean farmers get to ride this commodity wave. We're already seeing this here where money is going to flow from equities or wherever else, and it's going to flow into the commodity sector. I think it was Goldman Sachs said they were going to start going long commodities, and that's pretty big news when big hedge fund like that or big bankers say that stuff, right? So that's important to recognize. That is what's going to be happening. So we're going to see this bull market continue on for a little bit longer. One thing we really got to be cognizant of is high prices equals a lot of risk. And unfortunately, in this market, it's not just to the downside risk, it's also to the upside, because we're seeing it with canola right now. If you might have to write a check for, say $4 a bushel if you overcontract and we don't get this crop. It's big time risk. Regardless of what you do, it's going to be expensive if you're going to take out insurance or stuff like that. I know we had talked about spring price endorsement in Alberta here. Didn't really look like it was worth it for most producers, actually on anything right now. So that's something to consider when you're pre-pricing your crop right now. Anyway, some of the major revelations that happened this month, I guess, would be Canada announced we're going to be adding a minimum of 3.5 million metric tons of crush capacity. That's through Cargill and Viterra. And I also believe JRI is going to be adding on a bunch of crush capacity on that because they're going to be upgrading some of their plants. This is huge, people. This means we're going to be adding at least 5 million acres of canola to our already very tight rotation on canola. So I'm not quite sure where we're going to get this from. Maybe our exports go down or so, but this is pretty impressive. This gives us a very, very strong demand going forward on our oilseeds in Canada. So it's excellent for growers. We had a stats can out last week. I believe it was Monday. What they did say, there was no surprises here, maybe to the magnitude. We are seeing our spring wheat acres going down by just about 1 million acres. A little bit, and that's a big deal, which is actually good. We don't really need to grow a lot of wheat here in Canada. Nobody cares about this anyways. Barley, zero surprise there. It's up over 1 million tons, 13% up, 14% up, basically. That's huge. So we might as well assume we're going to have about 1.5 million more metric tons of barley out there. I suspect it's actually going to be more. I believe this number is a little bit smaller. Canola is only up 1 million in a bit, or under 1 million acres. So that's still saying we're probably not going to increase our tonnage by a whole lot this year, our production. So we might as well expect this canola market to stay strong unless something happens on the outside of Canada, right? Which is important to recognize here. So, the days of pricing probably a $12 canola are probably gone right now. We should see a very elevated canola price going forward here, especially if there's any production issues, right? Again, oats, they're down a little bit here. So overall, the market is doing exactly what it's supposed to do. It is basically telling you guys not to grow wheat, grow barley all day long, grow canola all day long. And oats, well, even though oat price is pretty strong right now, we've reduced those acres too. So that's excellent for us as producers here. Anyways, we've got a few issues here with the weather. This was done on April 28th. Boys, it's dry out there as a percentage of average. I don't think we have to tell anybody this, but it is drier across the prairies for sure. And we're going to need a good rain to get going here. I know a lot of producers I've been talking to are saying they've got the subsoil moisture, but they need some, like an inch of rain to get the crop growing. So hopefully we get that next week or so. Anyways, another important thing to look at here is our temperature difference from this year, from last year. Obviously, we're seeding, and you've got to need that temperature to know how the seed's going to germinate here. And lo and behold, it is actually below at least 1, 2, 3 degrees below normal, which isn't very good when you're trying to germinate crops. So that's something just to wonder if we could have a later spring, just the weather. Another thing is down in the States, this is as of April 29th, our weather. The western part of the USA is very dry. Texas is dry, Oklahoma is drier, Montana, South Dakota, North Dakota. These states are all dry. And together, these states produce a lot of wheat. I think it's 29 million metric tons, what we figured out the other day. And just to put that in perspective, Canada only produces 27 million metric tons of wheat. And it's a pretty big deal. If there's any issues with growing with their wheat crop, we can expect our wheat crop to the price to increase substantially here. And I was talking about this, I think last time, about the La Nina year, how that is going to affect our growing conditions here. So it's supposed to be drier in the Midwest and into Canada here in the summertime, and then it's supposed to get a little bit wetter in the fall. So we could have an early harvest, and hopefully it's not a repeat of hard times with the moisture. Anyways, we won't bring that up right now. Anyways, canola, again, the world stage of the canola, the world vegetable market is incredibly strong. There's a few factors affecting the market right now. We've got some dryness in North America. One thing that was really interesting was that Brazil removed its import tax on soybeans. Now, they're not doing this just because for fun, right? There's obviously a problem there that they need to crush soybeans. And so something's going on. Again, Canada imported canola from Ukraine, which was incredible. I don't know if it's ever even happened before, but we're on fumes right now. And this is very early to be on fumes with canola, right? Another thing that happened, so we're on fumes. Cargill and Viterra both announced that they're going to be building these big crushers in around the Regina area, which is incredible. So obviously Cargill and Viterra, these guys with Viterra, which is Glencore, they're not doing this just for entertainment value. They're doing this because they anticipate huge oilseed, veg oil demand going forward. So that is great. I don't really know where we're going to get the acres for these crops, but I guess we're going to figure it out as we go. So we got 3-4 years before that happens, but regardless, demand is going to be very strong. Risk and reward management, as you're going forward growing this crop, we know that canola is very strong demand on that. There's dryness in North America. We have zero ending stocks. One thing that happened just recently was the November futures blew right past that $650 on the per metric ton on the futures. This is big news. That was a major support and resistance line. So we can expect some volatility with that. And if it holds, and if it remains dry, 650, it's got to go below there. So I think the next one above, this is in the PDF, I think it's $710 on the futures would be the next big support and resistance line. So that's very important to remember this. That's why when you're pre-pricing, if you don't get the crop, there could be mega buyouts because this thing, it has the potential to move so far, so fast. So you just don't want to be writing checks for that. The wheat, the world stage, we're going to be watching for a La Nina year this year. If this happens like it happened in 2011 and 12, the wheat will rally significantly. I believe the market was up to like $10, $9 to $10 on Kansas during that time period. I'm just going from memory right now. And of course, we weren't able to capitalize on that because we had the old wheat board kind of holding us all hostage. But this time will be different. If the market does run up to there, we'll be able to capitalize on that. So that's why we're not super aggressive about locking in wheat right now. Now that things have kind of changed, and we're looking forward and saying, what happens if this happens, right? It's going to get exciting. There's going to be some production issues. We know Canada's lost about 1 million tons probably because we lost about 1 million acres, maybe even more, probably 1.5 million actually tons. There's dryness in the U.S. That's going to affect us, right? And that's going to get the market excited. Any dryness is going to get that market excited, and it's going to pop right up. One thing to really remember here is with wheat, I always say it's like the crack cocaine of agricultural demand commodities. I mean, it's kind of nerding out, but it's basically a vertical demand curve. And if there's any perceived shortage, it shoots up really, really fast compared to other commodities because it's associated with food and bread and all that fun stuff, right? So, and another thing that's going on right now when we look at these commodities is wheat is undervalued compared to corn and soybeans. And this always corrects. I believe traditionally it takes 1.5 bushels of wheat to buy, or 1.5 bushels of corn to buy 1 bushel of wheat. Right now, I think it's like 1.2 to buy bushels of corn to buy 1 bushel of wheat. So it's out of whack right now. It will realign at some point. So when that happens, the traders know that it will come back into correct. It will correct itself, right? It always does. So, but we can expect some volatility while this is coming along. So we're going to talk about barley right now. The world stage this is one time where farmers around the world are going to have responded to this barley price action, right? Everywhere we go, barley is really strong. The whole world can grow barley. So we can expect an overall barley increase in production this year. How that affects into Canada right now is we're not 100% sure yet. There has been a lot of export done on the books already in Canada, so we may be okay already, and what's left over is feed demand. So one thing too is the Australian versus China business that's going on there. They're still fighting it out. I mean, I think China took Australia took China to the WTO. Got a little bit of squabble there, and I think China also came back with them and said, we're not importing your wine. So it's far from over. Sounds like it's getting messier. So, which is good for everybody out here in Canada anyways. Risk reward management. We know, like I said before, there is going to be a lot of barley growing this year. It's close to 9 million acres. This is a big crop for us. All of a sudden, it actually pays the bills to grow barley, which is kind of I've never seen that before, really. New crop sales have been very aggressive. A lot of farmers have sold out at that $5 to $5.75, and some even got in that $6 range on these new crop sales. I know the elevators have been extremely aggressive. We're not quite sure how much they did sell. It could be as high as 4 million metric tons. It's probably maybe not that high, but it's going to be huge. Basically, with Canada right now, our ending stocks are virtually zero. There is virtually no barley out there. It's very strange times right now. And there also is a tight corn S&D. So that means corn is not flowing into Canada very well. Our dollar is not strong enough either. It's just not flowing relative to what it could do, right? It is coming in, but not relative to the same volume. So we're at 13 minutes basically right now, 14 minutes or so. So we're going to kind of wrap her up. What is the action plan going forward? This summer, the market is set up for basically explosive prices. There's no getting around it. There's large price swings in either direction. We're seeing that right now with canola, where it moves like $30, $40 a day. Those are patterns that used to move in a whole year. It's unbelievable what we're seeing right now, and that's in all commodities. I mean, that's happening. So you have to be really cognizant of that and not get all excited about pre-pricing and everything. But then at the same time, you want to do something because you don't want to be the one caught holding the bag, right? Because this thing could end at any moment. I don't think it's going to this year, but it definitely could. Remember what happened when Japan had that earthquake and and they had that nuclear meltdown thing, and the whole commodity, our commodities, basically collapsed for 6 months. That could happen again. Just we don't know when this next black swan event is going to happen. So we got to be careful of that. And if when we see these prices like that, yeah, it looks like it's going to be stronger going forward. But I don't know when the next earthquake is coming, and that could change our whole marketing plan, right? So, and the weather is set up for La Nina year, so that means it's going to be should be drier. We haven't seen it yet. It hasn't come to play yet. We won't know till I think maybe June or something like that. Then we'll know how dry it is down in the States for sure, and even in Canada. So if it's set up for a bit of dryness, we're going higher. So a few suggestions of what you want to be doing is you want to be ready for this market volatility. Have your pricing targets in place. Normally we would do targets of 10, 15 cents above. This year it's like literally 50 cents to $1 above what we originally thought could happen, because the market is so volatile. There's so much money flowing around. And part of this is a little bit of a different topic here to discuss some other time, is that's what we're seeing with all this, this crypto world and stuff like that, this volatility, and this money is finding homes very fast. It doesn't know what to do. So you don't want to be oversold in this kind of market, because things can happen very fast. The elevators, the elevator people and futures and options, you just can't be out there horsing around in this world, because it's super expensive if you get caught on the wrong side of this thing, right? And you want to have a bit of a plan in place, write it down, and then have a backup plan. Say you've locked in, say 75% of your crop, you get hailed out. What are you going to do? Who are you going to call, right? It's questions like that you have to do. Do you have a futures and option broker? Do you have someone you can call to buy this in, a neighbor, something like that, right? Lots of different things we got to think about, right? And then another question we want to think about, we never really want to think about this, but yeah, we're at really high prices right now. What are we going to do if the market starts to crash or fall? Are we going to say, well, she's coming back, but she never does? That's something we really want to consider, because we don't want to be going to hindsight in this market. This happens all the time, but with our current prices being so much higher than normal, and the profitability being so high right now, we can't be sitting there watching the market come collapsing. So what's your kind of strategy for that? What are we going to do with that? So that's another thing. Thank you. Hey guys, we've come to the part of the show where it's time to pay the bills, right? I'm not doing all this for free, of course. And I want to go through a few of the programs that I offer. They're all designed for the Canadian farmer and the 21st century. We all know things are changing super fast. It's going to get more complicated. Grain marketing has become probably the #1 issue on the Canadian farms today, right? Definitely the top 2. Anyways, I do offer a few programs. The first one is high engagement partnership. It's called the Market Max program. And it's, we're working side by side the whole time. What is the best option for your farm at this particular time? It's a two-way street, right? That's custom pricing. The next one is a Grain Defender. That's a low engagement partnership. That's for guys who just have questions. They basically phone me and say, hey, what do you think about this? And most questions related to their farm marketing, right? That's what that program's about. The next one is the Grain Navigator. That's this video you just watched, or the PDF you just read. That's a steal of a deal at $200 a year. It comes out once a month. And it's designed to slow this market information down so you can make wise decisions. I know you're getting a million text messages every day, and most of it is useless information. Let's get some quality wisdom into the farmer's head. That's what we're trying to do. And the next one is grain sales. If you have one particular question about a particular contract, or you just want someone to put it together, I'll do that for you. Typically, it's free most of the time. And yeah, if you have any questions, give me a holler. And I can say for sure, purchasing one of my programs is the best dollar for dollar investment you'll ever make on your farm. I've seen it time and time again. So again, thank you, and just go on over to the website there and sign up, or give me a call and say I want this, and we'll get going. And thanks a lot.